All right, folks, welcome back. All right, so we finally made a run below that May 12th, 2022 low here. And I want to take your attention into the hourly chart. Here's the trading day for Friday. All right, so we've consolidated, market ran up. We moved up into a deeper fair value gap, creating the high of the day. We broke down below the 39.15 level. Now, for me, this was the turning point that I required. Like, I didn't want to do anything prior to this run here. And today, I was utilizing that swing low there. So I wanted to see that break. The market trades below the short-term low here, took some sell side out there, and then ultimately taking out the 38.55 level rather handsomely. And we'll look at all this business when we drop down lower time frames. Let's look at the 15-minute time frame. All right, so here's that fair value gap it worked up into. I wasn't interested in all this business back and forth, chopping around. Finally, with the 39.15 level, it broke through it, and then we had a gap in here, which we'll see on the lower time frames. That was, in my opinion, the better trade. So anyway, it runs through 38.72 creates another opportunity in here. You can actually see the fair value gap there. Trades up. That's another short. Worked lower, finally creating the short-term low. And at 1:30, that's when we start watching the afternoon PM session. It rallies up, creates a short-term high in here. Fair value gap. The last hour of trading rallies back up into a fair value gap here. So if you look at the range from here to here, it goes back to a premium. I taught you that. So that's a target. This imbalance, fair value gap, reversal on Friday's trading up into an old imbalance there. Okay, so my son participated in shorts in here. He took 2 shorts and went long in here all throughout this. If we go into a 5-minute chart, here is that same idea where it went, created a low. 1:30, it starts doing its business. What's it reaching for? Going to go back into the middle of the range, into a premium. This is the array above, half the move from here to here is 50% equilibrium, and this is the premium level. So it goes down, small little drop down in here into the fair value gap after 3 o'clock, and then the market starts sending it into an algorithmic spool where all this price action starts running aggressively into the close, up into a completely random level that was shown on the hourly chart. And here we have the market trading right up into that area and then just consolidating going into the close. Now, let me go into this little area right in here. Here's that fair value gap there. It rallies up into it there and there, then breaks lower. In here, there's a fair value gap. It trades up into it there and sells off. Notice that it's occurring at the levels that I have here on the chart, those old lows where sell side would be resting. So we're using the fair value gap after a run below. In other words, think of it like support broken, return back into the fair value gap, not, listen folks, listen, not go back to the old low broken and act as resistance. Okay, that's not how I look at it. If the fair value gap doesn't exist, I don't trust that level as an old support broken term resistance. That's why I try to tell everybody that comes to me, oh, he's just trading break and retest, or he's trading support and resistance. I'm not, because I classify specific levels beforehand, looking at them with the logic that the market's going to create these patterns around them. Same thing here, old low, the fair value gap, it trades up into it. Why didn't it just stop at the 38.72 level? Because it's going into the imbalance here, then delivers going lower. So the 2 shorts were in here and here. The longs were in here, here, and then riding up into the imbalance. Today, I just wanted you to understand what it was and why I was not willing to take a trade yet, because I wanted this level, the 39.15 level, to be broken. I wanted that to happen first. And to do that, because on the 15-minute time frame, that gives me that break, whereas all up here, it's consolidated. I don't want to catch a break below a short-term low and then them run relative equal highs. So let's go one more time back into the lower time frame. Okay, so here is that return into the fair value gap here. So when it does this, I'm looking for it to move quickly away and start gravitating towards the other pool of liquidity down here. If you're looking at it from the relationship of short-term dealing range, this swing high, that swing low, we have our fair value gap here, trades up into it there, and that level, 39.15. So it's a confluence of several things, but the level itself just highlights where the liquidity would be. The imbalance is what I'm keying off of and what I'm focusing on. So equilibrium or above is what? Premium. That's what this is here.